Bill Baruch. He's the president of Blue Line Futures, joining us this afternoon to talk energy markets and the ripple effect across the board in terms of some of the companies that we look to when we see energies on the move, as they have been. Welcome, Bill. Crude down something like 7% last week, overnight to within 20 cents of that July low, around 65, a reflection of COVID concerns?
Yeah, I think there's definitely a reflection of COVID concerns now that are really starting to show up in China. China's imports, purchases, those tapered off in July. I think they kind of hurt the market too. We did get a little bid through the middle end part of last week, as Israel and Lebanon were lobbing missiles back and forth, and that kind of kept things together. But at the end of the day, it was really commodity carnage through Friday in a lot of spaces. I mean, the metals, the energies, they got hit as the dollar increased. And crude just kind of finds itself back at that, retesting 65 where we were middle of July.
Yeah, we've been watching the yen, the Swiss franc come off. As you mentioned, the dollar, a recipient of the bid ultimately, and that weighs on crude as well. Gold also taking a hit, so certainly something to watch. I was joking around. I said it's been a busy week for commodities, and we haven't even seen the cash open yet. Earlier this morning, I was messing around saying that. Let's talk a little bit about what's going on in terms of the ripple effect of these energy stocks. In some of the energy stocks from some of the move we're seeing in the energy futures. We've got, FANG, we're talking Diamondback, Oxy, Occidental, SLB, Schlumberger. We've got Devon also. These are all in the top 10 of the S&P 500 losers today, last I looked.
Yeah, and it's really as much of the same we've seen for really the last month and a half, 2 months, since maybe it was middle June sort of move. Crude really made the next leg, and these stocks didn't go with it above $70. So now crude's pulling back. I'm overweight in the energy space, and I've probably talked about that over the last couple of months as a commodity, even going back to last year before these were really performing. I own Oxy, I own Pioneer. I like these stocks. I think the next time that crude really makes the move, they're going to join the party and potentially even lead. So I think the market's vulnerable if commodities in general keep kind of, metals move lower, the dollar bids, and the crude could see a little bit lower. I mean, 65 could hold, but 63 is a gap close on the September contract, about 63.5 on the front month contracts. So, I think if we do get down there, there's a little more pain to see, but a lot of them are moving into their 200-day moving average. Oxy's kind of right above it. Pioneer just responded after earnings. They all had really good earnings, and I think one takeaway is the free cash flow on all these stocks. They're doing really well on that side of it and reaffirming their dividends.
All right, well, let's take a look real quick at the XLE, because this hasn't really seen that same price decay in terms of some of those individual names, and certainly in terms of what we've seen as far as the futures here. So maybe kind of signaling that, again, this potentially is a little bit overdone. We know that oftentimes we see that in crude. Certainly was the case here with the move up that we saw to 77 recently in the month of July. Let's talk a little bit about how, with crude oil prices lower, oftentimes we talk about how this is a good thing for the bottom line for travel stocks like airlines, but I guess not, Bill, if it's COVID related. Ultimately, airline stocks are grounded on the unknowns tied to, we've got mask mandates, lockdowns globally. We're talking about in areas in Asia, Australia as well. Here in the U.S., 100,000 cases, U.S. daily average. Let's talk about the impact this has on closely watched names, United Airlines, American, and Delta.
Yeah, I mean, it's definitely weighed on them. I've owned Southwest. I did own Spirit. I've cut Spirit. Spirit really underperforming. On Friday, the cancellations, that stock took another leg. It was a stock that we've been in for quite a while through last year, and we had trimmed, but just another very disappointing space where you're saying COVID, is the Delta variant, which news started to come out through the end of June, and that's where these energies and airlines, and they really failed at was supposed to be their next push. I mean, from a price perspective, where the stocks were trading, we were heading into the summer, and the good demand, the good earnings were going to be coming, and that was going to be sort of all these tailwinds of strong demand, more stimulus, and it just hasn't happened. It hasn't played out that way. The Delta variant has really been a ceiling to a lot of these stocks and opening the door to the downside. So it's been disappointing within there, but energy in particular, I'm really excited about second half of the year, and I think when it comes to these travel names, there's ones to pick from. Now, you and I have talked about it before. when you with United and American, is business travel coming back? And
Right.
is that going to do it? So I think the news today, Europe isn't going to put any restrictions on U.S. travel in, so that could be a positive as turning to the middle part of the week. So it's it's kind of where does this 7-day moving average in COVID cases move?
Yeah, we keep talking about how these TSA numbers are up. Everybody, this pent-up demand to travel certainly been reflected in those numbers, but ultimately it doesn't really matter, I guess, if the business travel numbers aren't necessarily improving at all, and doesn't seem like they have been. Bill, a couple names still on the list here. It looks like Marriott and Wynn also feeling some of the pressures here related to some of the COVID concerns here. We're talking airlines a bit lower here today, but also some of the individual names as well. It looks like Marriott down about 2.5% also.
Yeah, I actually been looking for a place because I cut Spirit a little back and then just fully got out of the rest of it end of last week and through today actually. And I want to stay in that travel space. I think it's going to have its time. I was looking at Marriott. I was looking at Hyatt. Hyatt had a really great earnings report, surged. Marriott kind of on the heels of that, sort of moving through a little bit of a bull flag pattern too. I think the space is there and it's going to perform, but it's it has the Delta variant overshadowing it. So the earnings overall broadly have been there. It's just the narrative. Everybody's pricing in the next 6 months, and there's a lot of question marks now.